And despite a cautious economic environment, demand for leisure travel next year remains resilient. Joining us now is Evercore ISI's Mark Mahaney to talk more about it. Hey, Mark, good to see you.
Hey, Mike. Good to see you, too.
So just the general findings here. I mean, there's a sense out there that, consumers kind of got a lot of the catch-up travel out of the way in 2022, and maybe the street's bracing for a bit of a letdown next year. But what did you actually find?
Well, I'm sorry. The street is absolutely bracing for a letdown in travel demand. It's been so robust. There was so much. It's the only part of consumer discretionary that was truly pent up. And so that's why you had the summer of travel love this last summer. And so that's going to create tough comp issues. But, we're waiting for the shoe to drop. It just hasn't dropped yet. We should assume that that's going to happen next year. The reason I still like these travel businesses going into next year is, unlike a lot of the digital companies that benefited so much from COVID and now find that they need to cut costs, travel companies cut costs way early on. So they already go into this softening environment with lean and mean cost structures. So I do appreciate that about their business models. And then if we peel back the results a little bit, Mike, we found really good results for both Airbnb and for Booking, and those are two of our top picks.
I'm interested in the Booking call. It has been the big outperformer relative to Expedia. What accounts for that, and why do you think that's likely to continue?
They've got growth initiatives. They've been just as careful with their cost structure as Expedia has been. It's this management team that's been in place for over 2 decades. So they executed through 9/11. They executed through the great financial crisis. They executed through the early days of the COVID crisis. This is a battle-tested management team. I give them a lot of props. Glenn Fogel and team he's built around them. So I think that's it. And, this is the largest player in lodging accommodations globally, and they're still the fastest growing. So you get scale and you get growth. And they also have new growth initiatives. So you're rolling out something called Flights, or a flights package, payments, and they're doing a lot more merchandising than they were in the past. They could arguably grow faster post-COVID, post-normalization than they were back in 2019. That's a good story to put together, and they're very shareholder-friendly. They've reduced their float by something like 20% over the last 5 years. In other words, unlike like some other internet companies, they generate a lot of cash flow. Unlike most of them, they return it to shareholders. They're very shareholder-friendly. It's a good GARP play.
Mm-hmm. Yeah, and certainly the company stretches back to beyond the last boom and bust, so they kind of have been through it all. I do wonder about Airbnb, because you said that some of these travel companies were not necessarily big pandemic beneficiaries, didn't extrapolate the demand there for years to come. Is that not something that Airbnb might have found itself with?
I think Airbnb fell in that same category, Mike. At the very beginning of the COVID crisis, we had dramatic rifts, reduction in forces at Booking, at Expedia, at Airbnb. They had to do it. They went negative. I mean, they had negative bookings, i.e. the cancellations overwhelmed any new bookings that were occurring. I've never seen that in history for travel companies, but that's what it was back in June and the June quarter, the March quarter and the June quarters back in 2020. So they took out costs, and it probably, frankly, for a name like Airbnb that had a lot of private capital, I think they were run kind of inefficiently. They needed that cost discipline imposed on them. And I think they came out of the COVID crisis a better business model and with stronger demand. That's actually one of the things that came through in our survey. We've seen a structural increase in the interest in vacation rentals, alternative accommodations, post-COVID and pre-COVID, and Airbnb's been the single biggest beneficiary of that. It's more expensive than Booking, so I do prefer Booking to Airbnb. But if you're, as a pure growth investor, I think Airbnb has a lot to offer, and we like the business and a heck of a lot of really good product innovation out of that company as well.
It seems like the market's implying that, some of the leverage is returning to hotels as opposed to Airbnb and other such sites. In other words, not as many extended stays. And it seems like the way the hotel stocks have held up better, that's the takeaway. Is that wrong?
I think that is wrong. And for reason is that the dirty secret behind online travel is that the supply has been dramatically fragmented. It may not feel that way to a U.S. traveler, but you leave the U.S., chain hotels are a small percentage of of bookings. You go to the Amalfi Coast; those are just as one random example. That's you're going to find just a lot of mom and pop boutique hotels, and that's really what travel is like in most parts of the world. And so, the more fragmented the supply base, the more fragmented the lodging options. And if you throw in vacation rentals and alternative accommodations, you've just by a factor of 10 increased the total amount of lodging supply. So it's actually a great supply environment for those intermediaries like Booking, like Expedia, and like Airbnb. And I just don't think the large chain hotels, I think they become smaller and smaller for those OTAs and for Airbnb.